Guess what? We're noticing a major shift happening where investors are pivoting from other parts of Ontario to focus on Toronto. Now, it might be because capital gains are getting taxed more, and so flips aren't as attractive, plus new policies being all about new construction, and so the new strategy is all about long-term holds. Now, are you wondering why the sudden love for Toronto? Well, let's break it all down, but before I do, don't forget to like this video and subscribe to our channel. Now let's dive right in. In Toronto, you can build up to 5 units on any lot without jumping through hoops. Yes, that's right, 4 units in the main house and 1 in the backyard. No zoning changes, no permission needed. Just make sure that your lot is big enough and you meet fire code. Now compare this to the rest of Toronto where the maximum is usually 3 units and it's up to individual cities to decide what is allowed. Toronto is definitely making it easier for investors to maximize density on each lot. Number 2, and here's a big one. With 5 units allowed in Toronto, this opens up better financing options like the CMHC MLI Select. 5% down, 50-year amortization, easier to scale. This is a total game changer. Better leverage means bigger ROI potential, and that's precisely why Toronto is stealing the spotlight. Number 3, more units on a lot typically give better rent yields. And as you can see, it's not only possible to cash flow in Toronto, even on refinance at post-build market values, but it's actually significantly better than the average of what's possible in other parts of Ontario. Number 4, in Toronto, there's no development charges for 4 units, and it's deferred for the backyard house too. So assuming development charges are around $50,000 per unit, that's $250,000 saved in building costs. Number 5, new units in Toronto no longer have parking requirements either. Another big one. Now here's the thing, even if you can build 5 units in other parts of Ontario, many cities would require parking on site, so that ends up eating into your build form. In Toronto, without parking, you can get a much bigger build, which is precisely why it ends up making the numbers work really well. Number 6, 30 units on major streets. Now this isn't reality yet, but we are close. Toronto is working on allowing up to 6 stories and 30 units on major streets, which can make the numbers look even better. So keep an eye on this if you're looking into the new housing multiplex space. Number 7, lastly, Toronto lots are pricier, but build costs are less for the same type of build just because you don't have to pay development charges in Toronto. And so the total investment cost isn't that far from each other, assuming that you fund the construction costs up front. You also end up with better rents in Toronto, and so running the numbers based on the same cap rate, the gains in Toronto are substantially higher. Now, realistically, Toronto cap rates are lower as well, so you end up having the potential for even better gains. Do you want to know the exact details on how we've helped investors turn single-family homes into 5-unit multiplexes? Well, just reach out to our team. Our Toronto real estate sales team specializes in investment projects like this in Toronto, and we can guide you to maximize your real estate investing success in the long run. Just head to this link to schedule a time to chat with us. Thanks so much for watching, and I'll catch you in the next video. Bye!